updates. Get the most out of today's episode by participating in the chat. Make sure you ask some questions, be part of the conversation, have a bit of fun, grab a coffee or a tea, take some notes and get ready to start your day, folks. Quick few housekeeping rules though. No spamming, no advertising or self-promotion in the chat. That's not on. Be kind and respectful to everyone when participating. And most of all, have a good time. Real estate investing can be your biggest asset. It also can be your most expensive asset when it comes to getting it right or getting it wrong, folks. It can be time-consuming, stressful, and that's why here at Positive, we have what's called a 6-star team, a full-service team that provides integrated wealth and property investing solutions and services simply designed to help you progress towards your goal of passive income through your property portfolio, folks. Make sure you check out our other podcasts on the Positive Mentor Network. Not only is there Wealth Coffee Chats, there's the Urban Property Investor. Drops every Wednesday with straight talking investing strategies and lessons with Sam Saggers. Property Investor Tales. This is where our clients, you guys, share real life stories from property investing, hosted by some of our advisors and strategists. And that's done every fortnight, dropping every Monday. Wealth, Wine and Wisdom, folks, that debriefs the week that was in the world of finance and property, hosted by yours truly, Jason Witten and Andy Fenton on Fridays. Hey, good morning, folks.
Good morning, everybody. Welcome to another Wealth Coffee Chat.
Hope you're well, folks, wherever you are.
There it is, team. Morning. Morning, wherever you're tuning in from today.
Early bird gets the worm, they say. Here at Positive, we offer a 6-star team. It's a team that help you at every stage of your wealth creation journey.
General advice disclaimer. The information provided is general in nature and does not take into account your personal objectives, financial situation, or needs. Before acting on any information, you should consider whether it is appropriate for your circumstances and seek professional advice from a licensed financial advisor. While every effort has been made to ensure the accuracy of the information, it is not guaranteed. It is based on our understanding of regulations and laws as at the publication date. As these are subject to change, you should talk to a professional advisor for the most up-to-date information. Any examples or illustrations provided are for illustrative purposes only and are not a guarantee of future performance. We do not accept any liability for any loss or damage incurred by reliance on the information provided. Any opinions expressed are subject to change without notice. Past performance is not indicative of future results, and all investments carry risks. Neither the hosts, guests, nor any affiliated entities accept liability for any loss or damage arising from reliance on the information provided. By listening to this podcast and viewing this presentation, you acknowledge and agree to these terms.
Good morning, team. I hope everyone is doing well. Welcome to another episode of Wealth Coffee Chats with myself, Alex. We talk all things finance, financial planning, and hopefully you get value out of this episode. So I hope you have your coffee. It's been a little while since I shared my coffee. But ultimately, today's topic and what I want to chat to everyone about is the recent announcement on the inflation rate. So, let's cut to the chase. The headline inflation rate, what do we got? 3.2, which means that in the last couple of months, it's increased. So not a good sign. However, nothing. I've been chatting about this for several episodes now, saying that the inflation that we're seeing versus the inflation in real terms is completely different. So is the average, or what they call the trim mean inflation, which has come in at 3%. So you remember how we chatted about, the RBA's target, which is between 2 and 3%. Well, 3% is at its highest level. So, and for those who don't know the jargon, trim mean just means the average over the last, sort of couple of years. So they're averaging it out. So, you put all the numbers together and then you just divide it by the time frame that you're looking over to get that number. So ultimately, 3% is on the higher end. Ultimately, we had unemployment rate come out a few weeks ago now, I believe, or maybe a month. So we saw the numbers there, right? The unemployment rate is rising, and this is a quite interesting time because on Tuesday next week, RBA will be meeting and looking at what do they do with the rates. So on one hand, the inflation is looking like it's spiking up again, and it's sitting at the higher end of where they want to see it. However, on the opposite end, the unemployment rate is also rising. So in this situation, right, with the higher inflation, you'd think, okay, well, they're going to hold, or they might even increase the interest rate. Whereas with the unemployment rate being higher, they'll probably hold or try to reduce. So it's a very interesting time. So I'll be making an early prediction, and don't take that as advice, but I think it's going to be a hold to see what the next sets of numbers will come out. So let's chat about the impact of this inflation rate that's come through in the last couple of days on your overall assets, right? So typically, as we've spoken in the past, there are different sort of asset classes and they react differently. So if we start with the most defensive asset class, which is cash, high inflation is not a good sign, right? Because obviously your purchasing power diminishes. So with high inflation, higher prices, your $100 will be the same, but the purchasing of an item will be much more expensive. So that $100 will buy you much, much less. So the next one in line is more of a fixed interest asset class. So we've got bonds, term deposits, things of that nature. And typically it's a bit of a mixed result, but overall it's a negative impact because with that, you've got, number one, you've got a term as a fixed interest, which has a term on it. So high inflation means that your capital, same as cash, will be devalued over that period. But also with a longer term fixed interest, it's actually, again, a negative, similar to cash, because you're getting your regular payments, but those payments are buying you much, much less. And where I said mixed because on the shorter end term, it's actually not too bad because there's a bit of a arbitrage that could be had there, like anything under sort of 12 months. There might be a little bit of an uptick there, perhaps. But overall, defensive side is a negative impact overall with these recent numbers of high inflation. Equities, so shares, share market, stock market, whichever way you want to call it. Again, typically the initial reaction is, whoa, hold on, let's it's going to be a sort of a small pullback because the share market always looks 6 to 12 months ahead. And there's been a lot of chat about cutting rates this year, 1 or 2 cuts perhaps before the end of the year. And when that doesn't happen, then the market retreats. And typically companies that are on a smaller scale, so maybe what we call a growth companies, the ones that are looking to expand, take on debt, etc., they typically tend to struggle because they need to pass on higher prices to their consumers, right? But the bigger players in the market, they tend to do quite well as well. But the initial reaction is always a pullback because there needs to be a repricing of the equities market based on the data that perhaps may have been estimated to be at a much better rate. So Overall, for the equities, it's actually quite good. So I'm expecting that the market will rebound in the next couple of weeks once everything comes through, and that pullback that we saw, sort of I think it was yesterday before, will be clawed back. Let me just have a look. We've got a few people jumping on. Morning, Kevin. Good to see you all the way from the US. So actually, on the US, they just cut rates, right? So I was going to finish up with that, but the US just cut rates by 25 basis points, right? So not an indicator, but just take a step back. Around the world, everyone is looking to cut rates as opposed to raise rates. So that's why my earlier prediction of a hold, I think, will be I think it will be accurate. I don't know. I could be wrong. So let's move along the asset class table. And so what do we got next? Property, right? So property is great. We still have the supply demand issue. So I honestly don't think that this high inflation will do any harm to the property. In fact, I think it might even make it a little bit more difficult to get into that space. So that's same with residential or commercial, right? With the commercial, what you're looking at there is really the rental yield, and the rental yield with the high inflation typically tends to increase. So again, we're only seeing slight uptick, which is not great, but expected. So property, equities, great. So let's move on to materials, so things like gold, silver, things of that nature. So again, typically if I use gold as an example, it's an asset that protects against inflation. So if the inflation is looking like it's going to go up, then those hard materials will also be trending upwards. So things like gold, etc. I know it's come off from its peak over the last sort of week or two, but that's a positive sign for that type of asset. So yes, so materials, that's a positive outlook. And let's have a look at Bitcoin. Bitcoin again, there's no real link between inflation and Bitcoin just yet because it's such a new asset, relatively speaking. So, but again, you saw Bitcoin tick up as well on the back of it. So, in summary, everything that is exposed to capital growth during the inflationary environment is likely to do quite well. Everything that is cash-based, that is likely to get a massive hit on the back of it. So, you know what? You don't have to go too far back. Just have a look at 3 years ago when we started going through high inflation, what happened to the assets, and the storyline there. So we're not in the same environment, but it's a good indicator as to what to expect moving forward. So again, in my view, cash will likely be the biggest loser out of all of this because it gets devalued daily. If you want to protect some of that capital, like a very, very conservative means, you go to the fixed interest. But really, right now, all the indicators suggest that equities, property, materials, or any other assets that can grow in value are the winners. They will fluctuate, so we know that. We expect that there will be fluctuation, especially with all the announcements around interest rates, around various political, geopolitical situations. So, but that's expected. But long term, we're looking at a much better outlook. So, as I mentioned earlier, the US has reduced their interest rates. So our interest rates are being announced on Tuesday. The latest cash rate was 3.6. I think it's going to stay there. We're not going to be moving up or down at this stage. We need more data just to confirm the high inflation, which I think will come through in the early stages of 2026. The electricity rebates that are coming have been coming throughout the full 2025 are coming to an end at the end of this month. So literally in the next couple of days, just looking at the calendar. So ultimately, all of that will likely put a bit of fuel on the fire with inflation. So, if we see high numbers again, I wouldn't be surprised. So on the back of that, that's all I had to say to you guys today. Hopefully that gave you a little bit of an idea where we are, what that number meant in terms of the inflation. The overall, we're sitting at 3%. What the numbers you'll probably see in the news about 3.2. All right. So until then, let's continue to invest, and we'll see you guys next week. See you later.
General advice disclaimer. The information provided.
Thanks for watching another episode of Wealth Coffee Chat, folks. Make sure you like, subscribe, and turn on your notifications so you never miss a thing when we go live. Improve your portfolio and investing game, folks, with Wealth Coffee Chats live every morning at 8:10 each weekday. Make sure you join us. Previous episodes are also available wherever you get your podcasts, folks, as well as our other podcasts from the 6-Star team here at positivementor.com.au.